All right, guys, welcome back for another episode in the Weekly Outlook series. This is going to be episode 4 and likely going to be my last one for this series. Now, you guys are probably wondering how come I'm going to cut this off. Well, really, my goal for this series was to only show you guys how I'm operating on a week in, week out basis. I think if I just continue giving you guys this, it feels like I'm spoon feeding you. And I kind of felt the same way when ICT was doing this as well. And the only way that I was able to learn was actually taking these concepts, taking these theories, and taking this process and actually going out on my own and studying it on my own instead of relying on him to release his weekly outlook every single week. So my goal for you guys is to take my process that I'm showing you right now and apply it to your own trading. This is the only way that you're going to learn properly. That way you're not relying on me, you're not relying on anybody else. You can take the process that I've laid out for you and, approach the markets the same manner week in, week out, and you're really gonna see your growth curve kind of go upwards because you're gonna turn into an independent thinker and not somebody that's relying on somebody else. All right, so let's dive into this. Again, my weekly outlook process. We're gonna go over the weekly calendar on Forex Factory, do our top-down analysis. We're really only focusing on the dollar. I know you guys are asking me to cover other markets, but that's not what I'm going to focus on right now. Again, it's the same process. So when when I'm sitting down and going over my processes, if I want to trade a specific asset, I'm going to sit down and do the exact same thing in that specific asset, look at the calendar, know exactly when I want to operate in the markets. All right, and then plan for contingencies, obviously. So this week is actually, pretty boring on the beginning of the week. So Monday and Tuesday, we actually don't have anything going on. And I'm sorry if I'm getting this out late. I have been a little bit busy. My wife's birthday is today, so I'm a little bit slow on getting this out to you guys, but it'll be out Monday. So today's Monday, the 8th. Tomorrow, again, we don't have anything going on both these days, so there's nothing interesting going on. Wednesday is going to be our biggest driver, I think, this week. So we have core CPI at 8:30 a.m. Now, again, you're probably going to want to sit this one out until the numbers come out. All right, so until 8:30 a.m. CPI comes out, then we're going to see if there's any opportunities. Sometimes the market will just run one-sided and you're not going to catch anything, and that's okay. You could always come back the next day or come back during the FOMC meeting minutes. So, again, 8:30 a.m., we have core CPI. This is going to be a big driver in the market, I think. It's going to really give us indication whether the Fed is likely going to keep rates the same or possibly hike or possibly cut. So I think based on this number, we're going to possibly get some more narrative out of the Fed going forward. Then we have FOMC meeting minutes. But this is not a rate announcement, so you can possibly trade this event. It's not. When we have a rate announcement attached to it, so we'll have the rate announcement at 2 p.m. and then usually the meeting minutes or conference at 2:30 p.m. But this one is just only strictly meeting minutes. So this one is not really, like, in my eyes, considered like a really high volatile, high impact event. You might get some volatility though. Now, Thursday, 8:30 a.m., we have core PPI. Again, a lot of times when we have multiple high impact news events like this, I tend not to be in the market beforehand. Only afterwards. So when it's, when we have 3 high impact news events, I'm usually sitting out and waiting for more information. Unless I'm already in a trade from the previous day, then I'm just going to try and manage my risk accordingly, maybe move my stop loss, maybe take some profits off the table. All right. So let's dive into the charts. And I'll go over to TradingView just for this. So we do have our weekly chart right here. And as I mentioned, for last week's outlook, right, we were looking for this intermediate term high. We had taken that on Monday, and I sent a comment in my community tab that, we've reached our target and we could likely just be done for the week. Now, if you didn't close for the week, right, this was Monday. You can see Monday, April 1st. If you didn't take profits above that old high, right, you would have given everything back by Friday. All right. Or if you were bearish, let's say if you were bearish, expecting this sell side imbalance to provide a selling opportunity, you could have taken an entry here, but been out by Wednesday. All right, so this is Wednesday. You could have closed your position Wednesday or even Thursday, and then Friday NFP you probably would have just sat out. All right, so you could have shorted it up here if you had a bearish bias. Now, I'm not saying my bias is always going to be correct, but this week it was. All right, so Monday gave us that expansion higher into the intermediate term high, and you see that we've broken down from that. So what are we seeing on the weekly chart? I'm looking at this order block to see if we possibly reject and trade lower, but we're going to have to get below this weekly sell side imbalance. All right, so we've taken out this old weekly high, intermediate term high. Do we want to sell off from here? We are in a premium from this high to this low. Do we want to sell off past this weekly buy side imbalance? This is my line in the sand. If we get below this weekly buy side imbalance, then we're going to shift our bias and expect lower prices. But we obviously need to trade and close below that level. All right, because CPI could definitely let's say trade down here Monday, Tuesday, and then Wednesday this will just pump. All right, that would put this target in sight again. All right, so CPI is not something I'm willing to predict and try and position myself ahead of CPI. All right, again, you have to think like the bigger players in the market. They're not front running a news event like that unless you have information that retail doesn't, and most of us, we're not insiders. All right, so you're way better off waiting and letting the market digest that information and then coming into the marketplace and figuring out, all right, what direction does the market want to go now. So let's dive into the daily chart and just quickly go over this. This is going to be a very quick lesson because I think all these levels right now that we've traded to the levels that we've mentioned, right, we're back inside internal range liquidity. Okay, now we just have to wait to see what the next move is going to be, and right now I don't have a good prediction of what we might do. So in my opinion, I'm leaning slightly bearish to neutral on the dollar. I would say I'm more neutral than anything, but the order flow that I am currently looking at is this sell side imbalance that was created on Wednesday. All right, so we had Wednesday, and then we had Friday, obviously retest this old low. So we retested Tuesday's low on Friday. You can see how we just rejected off that level and traded lower. Now Monday, we've already displayed some bearish price action. So if this wick, obviously, and us filling this sell side imbalance stays in place, then we're possibly going to see lower prices. But we need to get below this volume imbalance, this buy side imbalance, this weekly buy side imbalance, and then this inverted SIBI. So there's a lot of levels below us that we have to get through. All right, and that in my opinion is a high resistance liquidity run, just based on this price action right here. All right, and I'm not going to get into what is a high resistance liquidity run, but there's a lot of bullish PD arrays below us. Okay, so if we do break down, I would like to see the NFP high stay in place and then us trade lower. So I am leaning more bearish, but I would say overall neutral. And that's because we have CPI this week. All right, so we have CPI, and then we have FOMC meeting minutes, and then we have PPI. So all those news events could make this week quite choppy. And again, if you're uncomfortable trying to determine the direction on this market, well, what is the reasonable action to take? It's to just sit on your hands. Don't do anything. And in my trading week, this week, if I don't see anything after CPI that's clear, I'm most likely not going to do anything until I get some more information, because we've already taken out this external range liquidity in here, and now we're just in internal range. So which internal range are we going to seek? Is it going to be this order block in here? Is it going to be this buy side imbalance? Is it going to be this volume imbalance, this old low? Maybe we just trade down here and then trade away from it. This could be a possibility. But because there's so much, in my opinion, trapped order flow, we're stuck between premium arrays and discount arrays. All right, and you can even just tell just based on this year's price action. This year's price action is very, very choppy and very consolidating compared to the previous years. Okay, the previous years we had things like the Ukraine war going on. We have other you know, global headlines that are driving markets. But right now, we don't really have anything that's driving markets, right? The Fed's not doing anything with the rates. There's no imbalance in their rate decisions, etc., for us to actually trade. So until we get some more information, right, we're just trading inside of a range. So we have to be nimble. We have to be very mindful of where we're actually entering and exiting the markets, because you're going to get stuck in choppy conditions like this, right? And that's just the nature of market cycles, right? And this is exactly why I don't really believe when people say, oh, I can learn how to trade in under a year, right? Because you haven't even experienced one full market cycle. This ever since the beginning of 2024, they haven't done anything with the rates. So if you could just come to the markets and say, "Oh yeah, I know how to trade," it's not going to happen because you don't know what those different market cycles are like. How does the market trade when the Fed's hiking, right? How does the market trade when the Fed is cutting? How does the market trade when the Fed is, stagnant, basically like this? These are all different market cycles that you have to experience, and there's no shortcut to that. You cannot say, "Oh, I'm going to speed this process up. I'm going to force the market into a different cycle right now." The market goes through different cycles. I would say, yearly, even every couple of years, it's going to go through a different cycle. There's going to be a different headline that's driving the markets. And if you haven't been around long enough, like CPI has only really been a hot topic in the last 3 years. Before that, CPI wasn't really a thing. Or I wouldn't say it wasn't really a thing. Like, yes, the CPI numbers were always coming out, but it wasn't the driving factor in the market. All right, so you're going to go through different market cycles where these different data points are going to be driving the market more so than others. All right, even back in the day, NFP was much crazier than it is now. And it just comes from experience. It comes from understanding the different climates that we're trading in, and how to adapt to that, and understanding that, just because CPI is the driving factor now, 2 years from now doesn't mean that it's going to be the driving factor. All right. So these are the levels that I'm looking at for this week. Again, the calendar is not something that I'm willing to say without a shadow of a doubt that the market's going to go lower or higher. But I am saying that I am leaning more bearish than bullish, just based on us taking out this liquidity up here. We have this change in state of delivery right here. Now, depending on if we respect this level or not, is going to be my driving factor in which direction I am expecting. Okay. In my opinion, I would prefer lower prices on the dollar, but CPI could change all that entirely. So I hope you guys found this series useful and you enjoyed it. And if you have any comments or questions, just reach out to me on YouTube. Give me a like, give me a subscribe, and I'll see you guys in the next video. Take care.